Hi, this is Kerry Artak with Wicked Stocks, bringing you one of my occasional updates in the TLT. That is the iShares 20-year Treasury Bond ETF, the long bond ETF, the higher volume, really, of long bond ETFs, the most popular. I did record this video, by the way, on Friday, May 15th, 2026. And I'm just going to walk you through what is happening right now. And that is we are in the midst of a new longer-term sell signal. I know it's difficult for me to spit that out, but that is what we're seeing here. If you've been a follower of this series, and I can't really call it a series, but I do several of these a year. There was a point where I was doing them weekly, but I at least watching it and keeping you abreast of events. And this is an event. So we can walk through this a bit. I don't want to go all the way back in time, although I think I will eventually here. But this is October of 23. And really what you're seeing here is the TLT is in a mostly congestive sideways pattern. There's been some pretty wild moves. As the TLT goes up, long-term interest rates tend to drop. And the inverse is also true. As the TLC drops in value, long-term rates go up a bit. And so what we're seeing here now is the violation of what is a 2.5-year channel bottom that we've tested significantly, repeatedly since May of 25. We've not yet closed below this longer-term line study by a full 1% margin. And, the 1% violation threshold, as you can see in this chart here, it's quite important because while we did close below the channel bottom itself, we've yet to ever close at or below the 1% threshold of this. So that can become kind of a band of support unto itself. 85.30 is the channel bottom 1% violation this week. We're already at 83.82, so we've sold off quite a bit. Friday especially, interest rates have risen. The overnight rates have risen overnight. And it looks like we're setting off a long-term sell signal. So the way I see it, closing today, Friday, May 15th, below 86.16 by that 1% margin is a sell signal that has meaning into later year. Now, there is another element, it is worth at least taking a look at, or not ignoring anyway, a simple trend line off the same series of lows on the same exact chart, and that comes in at 83.83, and we're in the midst of testing that right now. 83.84 is the last price. It is a trend line off the October low of 23 and the May low of 25. So not to be ignored, but I do, from my own perspective, see the sell signal that is presently occurring below 86.16 is a valid one. If you are long the TLT or wanting to go short the TLT, I think the final shoe to drop on this long-term sell signal would be a settlement below that 83.83. And yes, while you're at it, because it is a long-term line study, by a full 1% margin. Let me change that to red so you can see that that is the 1% threshold at 83 even this week. That's not going to happen today. So we could play out here for another few more weeks before we then could, and I think will, close any week below this trend line by a full 1% margin. But I think this is a sell signal to be respected. I think you should respect, and you can even now initiate a short side trade in the TLT with a settlement today at 85.30 or lower. I am expecting 79.96 over the next. This is probably a 1 to 2 month play. With present volatility, could become 3 to 5 weeks. But I think by the end of June into early July, we will see 79.96. And this is a structure that passes, a full year of activity, so can contain monthly, possibly quarterly selling pressures. We could come off of it. But I do think the sell signal that we're seeing right now has longer term implications than that and more downside. And we can move back to this chart. There's your channel bottom at 86.16. For those of you who have watched any of my updates over the last 4 or 5 years, you know that there is this long-term 6-year channel top that we did close above back in September for the first time. We were expecting channel resistance as an ultimate objective. In other words, lower rates from September into this time this year. Obviously, that didn't happen, and what's occurring now is falling back below this significant channel bottom. So this is a sell signal that I think should result in a test or a retest, if you will, of this long-term 6-year channel top that actually drops into the 68.89 region by September. You also have a full channel extension, a targeting mechanism that works pretty well, and I've used it for years. In other words, the full width of this channel that we are now violating, if you extend that to the downside, that's at 68.29 now, rises to 68.89 by September, where it converges with this 6-year channel top. I think this is our ultimate objective, and I note here that a 16.5% move in the TLT typically represents a 1 to 1.25% move in long rates. In other words, and let me jump to the next chart because this is where I'll finish off. If this does occur, 70.14 is presently a 16.5% drop below present price point of 84. Actually, we're a little lower right now, 83.83. So this also is, well, what I'm saying here is we're looking at a 1 to 1.25% move to the upside in long-term rates is possible over the next, I'm going to call this a 3 to 5 month move. I think this could take the better part of a year, but I do think you're going to see a continued heightening in volatility. And I do think that these objectives can be met sooner than the sort of anemic trade we've seen in this entity now for the last year or so. I think that will increase somewhat, and that this, let's just call it upper 60s objective now in the TLT in reach by the end of the year, potentially over the next 3 to 5 months. If we can close back above 86.16, that neutralizes all of this and allows this market to continue trading sideways. In other words, interest rates wouldn't change very much under the scenario of closing back above 86.16 over the next few weeks. You can watch this as 86.17 next week. It's rising about a tick a week. So if you want to continue following this through time, if we close back above this at any week, say through May and into June, that neutralizes this idea. But we are going with this as a likely outcome over the longer haul. And longer haul means over the next, say, 6 months or less. And I think 3 to 5 months is the proper time frame. Within 3 months or so, 74.43, we can bounce nicely off this. But I do think we end up here before stability sets in, and we can then round up again as we move into 27. Nothing happens exactly as one expects. So I went through an entire series of rotational highs and lows there. But that's just, that's my imagination. But it's based on an educated guess with this violation of long-term support that we are seeing this morning. And that becomes, once again, official with a settlement today, first chart below 85.30, essentially. That's all I've got, and I'm sure I'll be bringing more updates here in the weeks ahead in the TLT, but looks like we're going to see higher rates here as a trend through the rest of the year.